Well, Bitcoin needs a shot in the arm, essentially, from network effects, because we're seeing less activity than we are elsewhere. So you need to drive new participants into the space. One thing I do know is institutions are coming into the space, but I think it's switching a little bit from the direct Bitcoin access to VC access and hedge fund access and other ways. So I do think we'll see some more balance sheet stuff, but the problem is the accounting laws still don't help. So for gap accounting in the US particular, they have to mark it to worst price. And so it's a real nightmare on a balance sheet. So until that gets resolved, we won't see many more corporations do it. Flip side, we're seeing all the banks building crypto businesses, and of which Bitcoin is the predominant one, Bitcoin and ETH again. So I do think the banks will have them not on their balance sheets essentially, but in their trading books. And I think we will see more pension funds and institutional investors. And I think this year might be the year of the sovereign wealth fund. You know, it would be really surprising if Dubai, Abu Dhabi, Kuwait, I think Singapore already has it on their balance sheet. Saudi, I think there's a whole bunch of these that I think will start doing it. They've already been doing VC investments in the space. I think they'll start coming into the space in terms of physical ownership of Bitcoin.
And for people that are watching that thinks, oh, that sounds great, but what would a sovereign wealth fund for Bitcoin, what would that actually do to, for example, the price, and also just for that next stage of adoption and even acceptance across regions?
Well, I think it's the real sign of acceptance. In terms of adoption, yes, it allows other pension funds to own it, other large pools of capital. Now, the key thing about these sovereign wealth funds is they have gigantic assets. So even a 0.5% weight is, billions and billions and billions of dollars. So when they come into the space, it's going to be meaningful and they'll be in it forever. So that's something to really keep an eye on, because when that starts happening at scale, it'll move the price for sure, and it'll drive pension funds to come in and kind of other players. So I think the SEC is fighting its own turf war with the CFTC, the OCC, the Fed, and everybody else who wants to regulate Bitcoin and crypto. So they're fighting war by saying, we're going to be tough on these people. Now, don't forget, the US government is full of baby boomers. So it's an old group of people who mistrust and have a fear of change. So there's that. So I think that's the fight that the SEC wants to have, and they want to look like they're in control of this. Meanwhile, there's 86 million millennials and 70-something million Gen Z who are now voters, who have a lot of money, and we've seen them as soon as you shake the cage, rattle the cage about banning crypto or trying to do something nefarious to crypto, they get together very fast. This is why I'm thinking about the DAO structure. My guess is when we're now getting into political season in the US, people are going to start to put together a DAO structure to support politicians of both sides that support the adoption of cryptocurrency. And people don't want to fight young, wealthy voters in gigantic numbers. So I think that fight's going to come. And I think the outcome should be, and here's my advice, is they need to walk away from the securities law, the 1934 securities law. It is unacceptable to tell people that they are not allowed to make certain investments versus others, while making it completely allowable to go to a casino and blow everything. I mean, it's so inconsistent. You can buy a gun, but you can't invest in a private company. I mean, how dare they do that? And you've got a very large group of young people who have an all-time record value equity market, bond market, real estate market. Here's the opportunity of a lifetime, and you think it's right to stop them. So I think people need to change the rules. I spoke to the chief fintech officer of Singapore on Real Vision recently, and I said, how's Singapore doing it? And he said, well, what we've done is just said, we'll give you risk warnings. So we tell you that it's a risky thing, that it's an early stage investment, and that it could go to zero, but feel free to invest. And that seems much more sensible way of going about it than saying, well, if you're not worth $1 million, the day you're worth $999,000, you're not allowed to invest in certain things. And the day you go over, suddenly you're now smarter and experienced. It's ridiculous. So it has to stop.